All right, let's talk about something you might find really surprising. We're diving into a powerful financial benefit, one that millions of salaried people in India already have, but honestly, very few even know about. Yeah, it's a benefit that's probably already yours, just kind of hiding in plain sight.
So let me just ask you this straight up. Do you have a life insurance policy worth up to 7 lakh rupees that you're not even aware of? I know, it sounds a little crazy, right? But for millions of us who are salaried employees, the answer is surprisingly yes.
So if you're a salaried employee in the private sector and you have an employee's providence fund, an EPF account, then you're almost definitely covered. And no, this isn't some weird loophole or hidden trick. It's a real dedicated scheme that was designed specifically for people like you. Okay, so what is this thing called? It's the Employees Deposit Linked Insurance Scheme. Now, that's a bit of a mouthful, so everyone just calls it the EDLI scheme. It's an official insurance cover managed by the EPFO. Yep, the very same organization that handles your main PF account. And it's actually been around since 1976, just quietly working in the background to provide the safety net for you and your family. So you might be wondering, okay, how does this fit in with my regular PF deductions? Well, think about your EPF account having a few different parts. You contribute to the main EPF fund, and a part of that goes to the Employees Pension Scheme, or EPS. But this third piece, the EDLI, is where it gets really interesting. The premium for this life insurance, it's paid entirely by your employer. You don't pay a single rupee towards it. It is literally a free benefit you get just by being an EPF member. Okay, so it's free, which is fantastic. But what is this safety net actually worth? Let's get into the numbers. There it is. 7 lakh rupees. That's the headline figure. And let's be honest, that is a substantial amount of money that can provide some serious support for a family when they need it the most. Now, just to be super clear, this is the maximum possible payout. So in the unfortunate event that an employee passes away while they're still in service, their nominee, the person they've officially named, can receive up to this amount. The final figure does depend on a few things. And don't worry, we're going to break that down in just a moment. Now, while 7 lakh is the ceiling, there's also a floor. The scheme guarantees a minimum payout no matter what, and that minimum amount is 2.5 lakh rupees. And this is so important. It means that no matter the employee's salary or how much money was in their PF account, the benefit paid out to the family will never be less than 2.5 lakh rupees. This provides a fundamental layer of security for every single member, period. Okay, so we've got a range from 2.5 lakh up to 7 lakh. But how does the EPFO actually land on the specific payout amount? Let's break down the formula. It's actually simpler than you'd think. The whole thing basically boils down to a 2-part formula. First, they take the employee's average monthly salary and multiply it by 35. And second, they add a bonus amount right on top of that. That's it. Now for the details behind those steps. That average salary is your basic pay plus dearness allowance averaged out over the last 12 months you worked. Here's a key detail, though. For this calculation, that salary is capped at 15,000 rupees a month, even if your actual salary was higher. Then there's the bonus. It's calculated as 50% of the average balance in the employee's PF account over the last year, and that bonus amount itself is capped at 1,75,000 rupees. So let's see how that math comes together to hit the maximum benefit. You take the capped salary of 15,000 rupees and multiply it by 35. That gives you 5,25,000 rupees. Then you add the maximum possible bonus, which is 1,75,000, and boom, add those two together and you get a total of exactly 7 lakh rupees. See? That's how it works. Knowing this benefit exists is one thing, but understanding how your family can actually access it, well, that's just as important. So let's quickly walk through the claims process. And here's the good news. The EPFO has made this process much simpler over the years. Your nominee doesn't need to file a bunch of different forms. They can use one single composite claim form to claim the Provident Fund balance, the pension benefit, and this EDLI insurance amount all in one shot. To make sure everything goes through smoothly, the nominee will need to submit a few key documents with that form. Think of it like a checklist.
the completed claim form itself, a copy of the member's death certificate, a canceled check from the claimant's bank account to make sure the money goes to the right place, and of course, some basic ID and address proof for the claimant.
Now, a common hurdle that families can face is getting the claim form signed by the employer. I mean, what if the company has closed down or is just being uncooperative? What happens then?
Well, the EPFO has provided a ton of alternatives, which is great. The form can be attested or signed off by any of the officials you see here, including the manager of the bank where the nominee has an account, a gazetted officer, a local MP or MLA, or even a postmaster. This is incredibly useful information that makes the whole process much more accessible. And here's something you absolutely need to know. Once all the documents are submitted correctly, the EPF commissioner is required to settle the claim within 30 days. If there's a delay beyond that, the claimant is entitled to receive interest at a rate of 12% per year for every single day of the delay. That is your right. So we've covered what the scheme is, what it's worth, and how it's claimed. Now we come to the most important part of this whole explainer: your role in making it all actually work. This whole thing is backed by official rules, of course, and they really just boil down to 3 simple conditions for the benefit to be paid. There's been a death, the person was an employee, and they were a member of the fund. Simple as that. But this quote right here, from the scheme's actual rules, this is the absolute key. It says the nomination made by an employee under the EPF scheme shall be treated as the nomination under this scheme. Just let that sink in for a second.
This makes it crystal clear. The person you nominate in your main EPF account, with Form 2, is automatically the nominee for your EDLI life insurance too. You don't need to fill out any separate forms for this. This means that updating your EPF nomination is the single most important action you can take to make sure this benefit reaches your loved ones without any hassle.
So we'll end with this question. This financial safety net, worth up to 7 lakh rupees, is already active for you. It's paid for by your employer. The claims process is clear. The only missing piece is your instruction. Have you logged into your EPF account and nominated a person you want to receive it? If not, please make that the first thing you do after this.